Hello everyone. Good afternoon and welcome to another session here in XM Live. This is the advanced room. Also, hello to everybody that is watching us on different streaming platforms. Usually, you see me and Juni in Forex Power Hour and Guess the Trade. However, surprise, we have extra session today. We have a couple of market events. And Juni, good afternoon. Good to see you. How is it going? How is life? How is trading? How is everything?
Good afternoon, Stanley. Everything is great. Managing trades, watching markets, preparing all the time, and enjoying the great weather here, like maybe 40 degrees. Trying to
Survive.
breathe. So everything is great. How about you?
Wow, it's 36
It's hotter
already
there. I
out.
think Burgas is close to 40, maybe.
I don't know. I
Some
think
friends from Burgas were sending me photos for 38, 40.
I just checked on my phone. It's 36. The best thing, us being traders, that we're in the office, it doesn't affect us. And when all the heat is being done during the day and we're done with our job, we go to the beach and enjoy it then. So I like it as a benefit. It's really too hot outside. I almost don't feel it not going out, just concentrated on the trading. For me, also very good, very easy market, I could say, easily predictable. Yesterday's event was not priced in, so it triggered huge volatility on the markets, ultimate dollar weakness, and that is actually um, very beneficial, at least I can say, and talk about me. Today we have a few events. Maybe we start with yesterday event. How did you expect so significantly low data when it comes to the core CPI, which is a mandate of Federal Reserve? Have you expected such low? I did not.
I think we've discussed that we both expected low CPI, if I'm not mistaken.
But so low, I didn't see
Well,
the core CPI.
I can't actually. That's very difficult to say exact number and how low, but it's a normal thing that probably CPI will be low for some time because of that fast tightening that happened. I always say statistically, this tightening that happened with Fed, it's the fastest ever in the history since Fed exists. And we never know. We don't know what are going to be the consequences of this because we never did that. They never did that. And I think that's why we will see um, left side of the inflation to be hardly hit from that tightening cycle. And I don't basically see why they will increase interest rates this month because they did it so fast and so hard that I don't think they need to increase interest rates furthermore. And because even if they don't increase interest rates another time, most probably inflation will stay low until it bounces back again. And well, I never actually try to guess CPI number because that's very difficult thing for me. I don't know how to do that even. It's all guess. Like let's guess it. Like and if we guess it, then it's okay. I guessed it or not, and what now? So the logic that I'm
The thing is that it was not price. I mean, since the beginning of the year, every time it was either as per the expectation on the core CPI or higher. We never saw a lower than the forecast. To me, that was surprising.
I think that as per the book, when you start to tighten monetary policy, you see the effect from 1 to 2 years after that.
On real
That
economy, yeah.
yes, that's actually the real economy decline is hitting the inflation, right?
Mm.
But another interesting thing we have, again, I'm repeating it, we never had that fast cycle rate hike ever in the history. So we can check what the book says normally. Yes, inflation will get hit 1 to 2 years, economy will decline 1 to 2 years after the rate hike cycle. But what about if it is the fastest rate hike cycle ever? So I think that inflation will decline. I still think that this is not inflation control. This is putting economy in big trouble while inflation reason it's not there. The rate hike are not going to control long-term inflation. Inflation is different. It's not only one type of inflation. There are different type of inflations. I can divide it in two. One first type that causes significant inflation is bank lending. When everybody's getting a lot of credits, credit bubble, and everybody spends like crazy, banks are giving credits easily. That happened 2009 and 1970s. So after 2009, banks are already prepared. They are way more conservative. They are not just giving away money like this compared to 2009. And we don't have inflation coming from bank lending. The second type of inflation that we are anticipating right now, it's big fiscal deficit. The money went to the government and they spend it way more than they can make. That increases the deficit, and rate hike is usually controlling the previous inflation, first type of inflation. Because bank lending, you increase interest rates, people stop getting money from the banks and spending less. And that's helping the inflation to cool off and go to the normal levels. But when you have fiscal deficits, and that creates a huge inflation because government spends trillions of dollars in the economy, then you increase interest rates, you are killing the economy, people can't spend much. But at the same time, you are adding additional deficits to the government deficits because they will need to pay more debt. They don't make money, we said, so they will have to borrow new debt to pay the old debt. Long-term inflation, it's going to be sticky. They cannot control it with rate hikes. And we will start to see it more and more in next years. Like this year, it's going to be battle between central banks and stuff like this. And after next year, probably next year, if not even faster, depends on the central banks when and how they will change. May happen this year, or I say next year, the new inflation wave is going to happen again. And no matter what, because this is increasing the fiscal deficit significantly. So we're going to see how they will manage this longer term situation. Right now, this rate hike cycle was short-term satisfaction to prove everybody that they can control the inflation. But what's going to happen with the real cause of inflation is my question. That's why I'm okay to see the inflation numbers declining. So we are in deflationary cycle, not deflationary, disinflationary cycle.
Right.
And the moment they just change, I think that inflation will bounce in next quarter, not immediately, of course. And yeah, let's see what are going to be the consequences from this fast rate hike. I expect if they continue, inflation will go down to the ugly levels, maybe. In terms of economy, like economy is already not good. PMIs are declining down. Labor market data started to show some cracking. Initial jobless claims are bouncing. We got some data that actually labor market data, it's more fake numbers than real. We got retail sales decline. We have some people may bring shelter sector real estates that are strong. Actually, the reason for that looks strong because people don't want to sell
Right.
their real estates in these interest rates. And there are some questions, as we've discussed multiple times with you on the sessions, that shelter sector have the slowest data. You cannot get it immediately. It takes a lot of time until they update it, they share it, and the accuracy and it's slow. And that's why it will take time until we see the more and more ugly numbers. And the question is, market is super positive for everything. We have extremely strong market. If that's actually weak dollar or really risk on we see right now, and if that's going to continue because we are very close to the all-time high than any low before. How do you see it?
New all-time high. I was very talking about the equities. I was skeptical that we're gonna get to new all-time high before we see new low.
I'm also here. Yeah, I'm also skeptical.
But
But
it
who
seems
cares?
that's wrong. I mean, I never had a proper sell signal to anticipate significant sell, but also my long positions have been very conservative, have been short-term oriented, exactly because of the edge or bias. I think more bias created.
Yes.
And also something else. If we get out of the current situation without a recession, after printing like there is no tomorrow, and then hiking like never before, I say that if this or next year we don't end up in recession, I think this will be the biggest win of the modern world banking to me, and they're gonna. I mean, I don't know if it's gonna be lucky or anything, but they're gonna have my head down absolutely for this. It's crazy. It's for me. It's gonna be unbelievable. Really, how I see it. The artificial intelligence hype is still there. Nothing to add much in terms of equities. They like being bought at the moment. The AI companies currently are used as a safe haven. If that is real, yes, AI is here. It's not something that it is. You're just not inventing the hot water right now. It has been here for all of those years. It's just a further development, and also Musk is buying is reserving huge um, package of chips from Nvidia as well. This is continuing boosting the market and continuing generating hype. I say that AI is still here, and it has been so far the ultimate drive for the markets. And from this point on, maybe from now on, it's gonna be just the optimism and the sentiment that was finally a relief type of form from the core CPI that have been so disappointing report after report. It's either higher or equal, and now finally a relief. Inflation is down, and market loves that. I see. Um, I, it seems I'm more wrong than being right because um, I said it like on about 13 or 14,000, where we were somewhere in the middle, and we were in almost equal um, point size, dollar size from high and the low. And I said that I believe more that we're going to see new low before we see a new high. Seems that I'm probably wrong. The probabilities are in against me. The good thing is that I'm not short selling this blindly. I never had a proper signal. There have been some levels, some attempts, more like short term positions rather than anything else. Good day also to Miriam. Hello again. Hi, Miriam. You're very welcome. Good to see you. Andrea is also in the building. As always, hi, Andrea. Thank you so much for participating. Andy is saying take UE claims. Taka. Um, UE claims will make the dollar yen goes up again. Oh, we have a couple of events at 30. I suppose that you're talking about initial jobless claims and continued jobless claims. It's gonna trigger at the same time at, as the PPI and core PPI. So we're gonna have inflation data and also labor data simultaneously as every Thursday in this time of the day. Um, I'm not sure. I think that in terms of whether it is going to change the direction of the trend, I say no. Even the PPI, which originally is a catalyst for the CPI, which has been catalyzed by raw materials, aka commodities, or services related with commodities or transportation, um, have been dropping so significantly back in time. I'm just going to show you the core PPI back in history. Sorry, Juni, for a moment. We'll give you the mic in a second. We have seen so significant decline on the PPI that I think it's already priced in. The question was on the consumer price index, if it will trigger after all. And the peak has been 2022 April. 1 year on, we're already at 2.6. So even though this came a little higher, this is core PPI, maybe just a pullback, but the optimism is still there. There has to be something major, something that's not priced in. If it comes way bigger number, like we're getting back to 3 point something and we see significantly higher than before, then I think we could get into deeper correction, like or why not reversal or anything. But I just don't see it right now. Maybe it's gonna be a good opportunity. Who knows? Juni, A question to you: do you think that on the claims or the PPI on the event today generally, we may see dollar yen up again?
Direction wise, I cannot say if I don't have confirming price action before this.